Good morning, everybody. This is Rick Geiler with SilverSide Insurance here in Scottsdale, Arizona. And I have with me today Michael Frahm. He's the product manager at Sagicor. He has a list of credentials I don't think I could fit onto the webinar announcement, but rest assured he's a very capable man, and I'll get it over to him here in a minute. He's graciously allocated me a couple minutes, I guess, to go over a couple things here that he's really not going to detail, so I'll color it up a little bit. Here's one product that most of you folks have probably seen. This has been a really big seller for Sagicor this year. In fact, they've capped premium that they'll take on this product. It's been so hot they want to leave it on the market. But this is the Sage Advantage, they call it. What it is a 9-year bonus indexed annuity. And I'm not going to bang on every detail on this sheet here. I'm going to point out a couple of the really key features that's made this a hot seller. Then I'm going to show you a little bit of an illustration that really drives the points home. This is a 5% premium bonus. That's an immediate vested bonus. That's part of the contract value day one. There's no recapture on surrender. There's no vesting period, anything. The truest bonus you'll ever see. And it has 3 crediting strategies. I can get into this one-on-one with you. I don't want to spend a whole lot of time on how the crediting works. It's your typical indexed annuity, multiple crediting options. Minimum premium is $2,000. So if you have folks who are thinking about opening an IRA, making an IRA contribution at the end of the year, you could open an account with just this. If you have folks who want to move some existing qualified money and make a 2013 contribution on top of that by the end of the year, it's really time to start thinking about that, because this is going to be a single premium product. So you can bring in premium from multiple sources, but you have to have it all in-house at the time of issue, so you can't add later. So if that's the kind of thing you want to do at this time of year, it's time to start planning now for that. But the other really hot feature that's made this a huge seller is the cumulative free withdrawals. So if you, and this is down here below, and rather than try to have everybody dig through the print, I know it's probably kind of a small font for everybody out there. I'm going to just bring up the illustration that'll drive the point home how that, let me make sure I get the right illustration, because here we go. Okay. This is on the company, on the Sagicor software. You can run an illustration giving your clients personal information. It's really not critical to get the thing issued that you do illustrations, but on this particular product, it can be a useful sales tool. I'm going to show you why. This right column down here, and I'm highlighting multiple columns, but this column here shows you worst case scenario. With zero crediting. On this particular example, I hypothetically just said, what if you split your allocation 50% between the S&P point-to-point, 50% in the basket? Regardless of how you'd split that up there, you would still have the same guaranteed minimum surrender. So that's what's really made this a hot seller. This, as you can see, at the end of year 2 here, you're getting a guaranteed return. Worst case scenario, if you have to make a full surrender, pay the 8% surrender charge, and walk out of this after year 2, you're still going to be up about 1.3, 1.4% here. So if you have folks who are sitting in CDs making half a point or whatever they're making because they like the liquidity of the CD, you can say, hey, look, we got this. You have a lot more upside. And I can show you some more illustrations, but just rest assured here, after 10 years, based on historical numbers, you're going to have 148,000 splitting this up between the 2 strategies, and you're really not giving up any liquidity for what's significantly more upside than you're going to have in bonds, CDs, any kind of guaranteed instrument. So this is a hot seller. Again, premium is capped right now. I have a promise from Sagicor. They're maybe trying to take a look at that at the end of the year, but for right now, $100,000 per Social Security number is the most they will take. They want to leave that on the market as a mid-market kind of thing. So that's the Sage advantage. We can run illustrations from here. I can get you the quick view, the details. Anyway, I don't want to spend a lot of time on it, but it's important everybody knows that's still out there, that's still available, and at this time of year for qualified money, it may be something that's a real option for some of your folks. And now I'm going to just skip a little bit here. Michael is going to get into the details of the term and the no-lapse UL products, but he's just going to show you some of the company presentation on exactly how they work. So I'll take this quick opportunity to just show you how it's priced. And this is a CompuLife quote I ran a couple days ago. It's just a sample quote. This would be guaranteed 20-year level term, male, born in January 1970, $150,000 level 20-year. And as you can see, Sagicor is priced right in here with all the big names in the term business. And it's simplified issue. And Michael is going to detail exactly what that means. But for right now, that means there will be no medical exam. There'll be no fluids. There'll be no, it'll be written off of the databases and a phone interview. Again, Michael will detail that for you a little bit. The point being, you're not giving up anything in the pricing or product feature arena by getting the simplified issue option. And here for another example, this is a female. I think I did this time, again, January 1970. This is a no-lapse universal life. And again, you see the Sagicor is priced tightly right in there with the best price, biggest name carriers in the business. So with that, I'm going to see if Michael's available. I'm going to turn it over to him, and he can get into the bulk of the presentation, including some real finer details. Michael, are you ready to go here?
I am. Good morning. Yeah, I'd just like to say that Rick is a longtime friend of Sagicor. He's our go-to guy if we ever need any input in the market and such. My personal opinion, he's one of the top guys in the nation. Like I said, I always like to go ahead and just give him a call. If he gets any details on something that's going on, he shares it with us in that regards too. But I just want to confirm, Rick, you can see that slide, the first slide?
Yep, looks good from here.
All right, terrific. Okay, and just to give you an idea first, just who Sagicor is. Now, here's the thing. Sagicor has been around since 1840, but the thing is, in the United States, we've only been here since 2005. 1840 in operations in 22 countries, the majority out in the Caribbean. We started out back in 1840 in Barbados. Our rating is excellent, A- by AM Best, and we're in 45 states at this time. Now, I always like to go and give you a little idea of what we stand for, because we're a little bit different. When we started out Sagicor back in 1840 in the Caribbean, well, they helped out those different countries out there, Barbados, Jamaica, all the different ones around there, Trinidad, Tobago, and then they went up to the UK and South America and the US, as I mentioned on there. But they helped the community in that regards. So it's not just a life insurance company. They also went ahead and dumped a lot of money in their charitable donations and such. So this leads to our vision statement: a great company committed to enhancing the lives of people in the communities in which we operate. Our brand name, Sagicor, actually came from two different words: sage, well, meaning wise, and then core, meaning heart or judgment. Now, our corporate philosophy, we have a couple that's out there, but the predominant one is wise financial thinking for life. Now, in doing business with Sagicor, we have a producer portal. You can obtain all your forms, your status reports, training modules off of there. And we also have a dedicated producer resource center. These are live human beings that you can contact and get help with. These are specialists that are just a phone call away. We also offer full access to our underwriters. We offer express issue, simplified issue, and fully underwritten products. And we have an electronic submission process for our no-lapse UL, whole life, and term products. So we do have that e-app for you. And we pay commissions on a daily basis for settled business. All right, the first thing I'd like to do then for you is cover our fixed index single premium whole life. This is a unique product that's out there. Other companies typically have fixed index universal life, which you can't go ahead and say guarantee with like you can with this whole life. Issue ages on this product are 45 to 85. Minimum premium is only $5,000. We like to say there is no maximum premium on this. We do get large sums on here, 7-digit amounts that come in here, but anything typically over $500,000, we just look at home office approval on it. 2 risk classes, standard non-tobacco and standard tobacco. This is non-med point of sale. So it's a table 4 issued, again, those 2 rate classes on it, but it's point of sale. You're going to have an answer right there with your client. And there's health questionnaire, meaning non-medical. We do not have a paramed. There's no APS on here that we have, no EKG or anything in that regards. This product also has an immediate 10% interest bonus. So if they put in $100,000, the illustration is going to show $110,000 immediately. And on top of that, the next bullet point is that guaranteed return of premium. And that's from day 1. So you're going to see that this is a safety valve for them. So if they do need to get their money, well, they'd pull it out and get that $100,000 back then. 10-year surrender schedule. Loans and withdrawals are available after the first policy year. Remember, that's a single premium on this, so it's going to be a MEC. And then an accelerated death benefit rider for terminal condition or chronic illness at no additional cost. This is a big one. I just want to cover that for you with that accelerated death benefit rider. I have a screen that's going to cover that later on here for you. Well, I should. I'm sorry, we just had this redone on it, but the details on it, you're going to see that it's transparent. If somebody needs to get a hold of that money, there is no discount on it. So they can get $250,000 up to it. We do say, though, that $25,000 is going to be left as a death benefit on it. So say, for example, if it's a $275,000 death benefit, they would receive $250,000 with that $25,000 remaining as the death benefit for you. Now, with this fixed index single premium whole life, there's 3 unique diversified crediting strategies. Well, the first one's the fixed account with a minimum guaranteed interest rate of 2%. The second one is that S&P 500 point-to-point, 100% participation, current cap at 7. But the big one, the unique one I'm referencing, is that global look-back advantage strategy. Now, this diversifies out the portfolio because you have the S&P 500. You could, as Rick referenced before with our annuity, this is on the life side. Same animal on there with the indexing strategies. You have the S&P 500. You could put 50% in and then diversify with the additional 50% in the Russell 2000 Eurostock 50 index and the Hang Seng, and that's that Hong Kong China index on there. Again, point to point, the participation rate, no cap on it whatsoever. The nice thing about this global look-back strategy is it is different. It's not just a blended rate on this. So I'll go right to the second point. It says we add 60% of the best performing index. That's of those 3 I just mentioned. And then 40% from the second best performing index. And we take the third one and we throw it out the window. So you get the 2 best performing at a 60-40 split. And we do have compliance approved leave behind sheets for this too, for your clients. And it states, in other words, you're able to participate in a specified percentage of the actual indices returns without being subject to loss of principal. And again, you get the best of the best in that regards too. Here gives you a little bit of idea of what I'm referring to. And you can see that with these globals, well, some years were bad years for our domestic. Well, other years on here, you can see that you're going to be able to offer your client 10% returns on certain years in that regards. So it's a good diversification. Here we go. Here's what I was talking about, the accelerated death benefit rider. And when we get done, Rick, I'm going to redo this format and put that right back there because this is a huge benefit. Instead of saving the best for last. But again, that terminal illness, like I said, the lesser of $250,000 or the death benefit minus $25,000 on here. This is a big, big benefit for you for terminal condition. Chronic illness, we do the same thing. It's paid out over 33 equal monthly installments. So that's our fixed index single premium whole life. Now, our 10, 15, and 20-year level term insurance on the Simplified and the fully underwritten platform. I'm going to cover the Simplified Issue first. And we like to say that we're kings out there as far as it goes with Simplified Issue. Sagicor offers something that, again, isn't unique out there. I mean, isn't ordinary out there. It's unique in that regards. With our issue ages, you can see 18 to 65 for 10 and 15-year term, and our non-tobacco 20-year. Tobacco 20 years, 18 to 55. Face amounts, 18 to 65-year-olds, 50,000 all the way up to 399,999, just shy of $400,000 on Simplified Issue non-med term. Underwriting categories. Here's a big one. Non-tobacco is preferred and standard and rated. Typically, you just see rated out there at the table 4. And then with tobacco, we offer preferred and standard. It just requires a brief tele-underwriting interview for our Simplified Issue. Underwriting decision is done right then and there when you're still with your client at the completion of the interview. And we offer as e-app or paper application. And there's voice signature capability during the telephone interview. And there's only 7 yes or no health questionnaires, just a health questionnaire. There's no bodily fluids, no paramed, and no APS required. Now, they're fully underwritten. Issue ages are 18 to 75 for a 10-year term except male standard tobacco. Male standard tobacco is 18 to 65 for 10-year term. Now, this is unique too because you're saying, well, why did you do that? We did this in order to get you the best rates possible that we could. If we would have lumped them together, it would have had an effect on everything. This, we segregate out male standard tobacco, and you get better rates though for those other rate classes for the 10-year. 15-year term, 18 to 70. Non-tobacco 20-year term, 18 to 65. And tobacco 20-year term, 18 to 55. Base amounts on this, 18 to 65 is $400,000 and higher. Remember, Simplified Issue 18 to 65 was $50,000 up to $399,999. And for issue ages over 65, so 66 to 75, begins at $50,000 only. Underwriting on our fully underwritten, our preferred, both for tobacco and non-tobacco, are preferred, standard, and also substandard from a table 1 all the way through to table 8 for you. Now, we also have those accelerated death benefit riders for our term. A little bit different, but very, very rich out there. This accelerated death benefit riders for terminal condition and nursing home confinement. As you can see, it's the lesser of 50% of the initial term policy amount or $300,000. Now, we do offer optional riders, an additional charge, accidental death benefit rider. That child's term rider is for fully underwritten apps, and then a waiver premium rider. Now, with all our term products on there, we have guaranteed level premiums for the entire term. So that means that that guarantee is not just for the first 5 years, like other companies. If you have a 10-year, 15 or 20, it's for the entire 10, 15, or 20 duration. Your premiums are guaranteed to stay level. Level death benefit to age 95. Convertible to age 70, but another significant benefit that Sagicor offers is our term conversion credits program. Now, with that, you can see in years 2 to 5 of the policy, for example, in year 2, if you can convert it from the term policy to one of our permanent policies, 100% of the previous 12 months base annualized term insurance premiums are applied towards either the initial premium, the new permanent policy, or the cash value, so it can start the cash value. And I just want to clarify something. When I talk about 12 months based annualized term insurance premiums, what that means is not with riders and such on it. It's just the base policy on there. So all that money that was paid into the term insurance for those previous 12 months is thrown into the cash value or applied as the first premiums of a permanent policy. You see in year 3 it's 80%, year 4 60%, and year 5 at 40%. Okay, another big seller for us is our no lapse universal life. A lot of companies have been getting out of this market. We're looking to take as much money as you can give us in this one. We offer 3 different categories of underwriting on this: express issue, simplified issue, and fully underwritten. Our express issue, you can see that the issue ages are 5,000 to 24,999, with issue ages 18 to 75 years old. A lot of folks call this final expense out there. We don't like to go ahead and limit it that way. We don't want to be known as a final expense company because we offer simplified issue up to almost $250,000 on here. But this is a no lapse UL. 8 questions only on the express issue app, no telephone interview. 2 rate classing, standard non-tobacco and standard tobacco. I also mentioned underneath that express issue category is our juvenile express issue. That's 15 days to age 17, 25,000 up to 99,999. 1 risk class, standard juvenile. Now, with the simplified issue, now there is a telephone interview with that, a brief interview. It's about 15 minutes only, but you're going to see that you're going to have opportunity to get a higher death benefit at a good premium on this. So I'd say look at the simplified issue at 25,000 as opposed to the express issue. You're probably going to get a better rate category in premium for your client. Now the 5 rate categories that we have are preferred non-tobacco, standard non-tobacco, rated non-tobacco, and preferred and standard tobacco. Kind of deja vu from what you heard with that term policy. We try to standardize this, keep things, keep it short and simple for you. And then with the fully underwritten, this is for ages 66 to 85, amounts of $25,000, and then and higher, ages 18 to 85, beginning at $250,000. And the same underwriting is available, as I mentioned, with the term on there. Now, with their no lapse UL, we also have accelerated benefit insurance riders on here for terminal condition and chronic illness. You can see on here that it's a little bit different, but it's the lesser of 25% of the death benefit or $400,000. Optional riders, we do also have as additional charge, accidental and death benefit rider, children's term rider for fully underwritten apps, and waiver of premium rider. Now this is a spreadsheet I put together because I mentioned before there's quite a number of producers in that small death benefit realm, and I'm showing a $25,000 policy here. You can see Sagicor, actually we have the preferred, standard, and rated. With other companies out there, they only have that table 4 rated. You see there is quite a significant difference. Theirs is a whole life product. Ours is on a no lapse UL, guaranteed to age 120, guaranteed to age 120 chassis on there for you. So even with our rated compared to their, what they call standard, which is in essence a table 4 on there, we still come out a whole lot better. And on top of that, there's also the accelerated death benefit rider on there too. So if they do need this money while they're still alive, they have that living benefit on there. And another thing that we do, we have a worksheet. It's a sales tool, and we call it What Do You Have to Lose? And I'll just preference it this way. With Social Security income, your seniors are going to know that when the first spouse dies, the surviving spouse only gets typically the lower of the 2 Social Security amounts. Pensions, they may lose the pension amount entirely, or it may be reduced, for example, by 50%. And then emergency funds. They may have $10,000 sitting in the bank. Well, they're drawing interest on there, or they have it just in case funds. Well, if they don't have life insurance to cover those final expenses, that evaporates and they have nothing left over. So we do have, this is just a little excerpt of the worksheet on there, but all you do, numbers don't lie, you fill in these numbers with your client, and on the flip side has an easy mathematical calculation that will give them that dollar amount that they need in life insurance. This is something that Rick can go ahead and provide for you too. So Rick, I'm going to turn this over to you then at this time, and I want to thank you for the opportunity to speak to everybody this morning.
Okay, Michael. Hey, thanks for all of that. We moved pretty quick, covered quite a bit of stuff. We did have a couple of questions come in, and I'm just going to, one thing that we need to clarify a little bit was on that chronic illness rider that Michael was highlighting there. And what I'm going to do for this is I've been prepared for this kind of question because these usually come up. What I have is an illustration here, and it's similar to that annuity illustration I showed a little bit ago, but what I'm going to do, and this is down towards the bottom, if you guys get illustrations from my office, sometimes you got to pan to the bottom because this is actually a supplemental part towards the bottom. This is page 10 out of 14 here, and I think I abbreviated. I left some of the background pages off. So a full illustration might be 18 or 20 pages. So if you get one and you say, hey, you didn't give me the chronic illness supplemental one, we probably did, but you have to keep panning down. But what this is going to show you, again, $100,000 premium, like Michael said, $100,000 on a female age 65 gets bonus 10%, so that's going to drive the cash value. In the early years, the cash surrender value, since there is a surrender schedule, is going to be that guaranteed return of premium he mentioned. I'm looking at the guaranteed side here. So worst case scenario, again on this example I split the allocation up 50-50 between those two. They're similar strategies. The caps and par rates are slightly different. And on this one it actually shows you what the historical return is on that particular strategy. So you're looking at 4 or 5% with where the rates and caps are right now. But the key thing to keep in mind, that chronic illness benefit Michael was talking about, this gal at age 65 puts 100,000 in. She's guaranteed, worst case, if these strategies produce zeros for year after year after year, she's going to have almost $5,000 a month for 33 months in tax-free cash. Now I know the company doesn't always like to give a whole lot of tax advice, but generally speaking, death benefits of life insurance are tax-free. So this is an acceleration of that death benefit, so there won't be a 1099 or a taxable event on that. And as you can see over here on the current side, assuming the crediting strategies perform as they have historically, you're going to see she's going to be getting a little bit more than the 5,000. And actually, if we pan down to later years, that's actually going to grow up to 6,000 or 7,000. I think this is the maximum mathematical amount that benefit can pay. That would be 3% of $250,000, I believe, is what that's going to come out to be on a monthly basis. So folks say, well, you know, I see a lot of single premium lives out there, and a lot of them have some kind of benefit like that, a nursing home benefit or whatever. What makes this different? Well, this is why we think it's the best one in the business. Is not only is that a cash benefit, but here is the actual claim form that you would use, or your client would use, you would use on their behalf if the day came where they actually could not perform 2 of 6 ADLs and needed to trigger that benefit. They'd fill out page 1 here. See, pretty simple there. Name, address, and what your conditions are. And then they would take it to their doctor for page 2 here. I'm not sure why my illustration, or my printout here. Let me zoom back. There we go. And page 2 is very similar. 1 page from the attending physician, basic information, And there, that goes into the Sagicor Claims Department. Anytime after year 1 with no waiting period, that roughly $5,000 a month tax-free cash benefit is available, triggered by just this claim form. And the pages 3 and 4 here are just state fraud disclosures. So I'm sure we wouldn't have anybody in that category. But that's the illness benefit, and that's why that product is so powerful. Is you have a pool of money that's available for either death or illness on an easy trigger, very tax advantaged. So I have a number of questions also. State availability and such, please go ahead and just text or I'm sorry, email us or call us, and we can get you details. I see a couple folks have asked specifically, and we'll get back with you after the webinar here on the state availabilities and those kinds of things. Most of these products are widely spread. Sagicor's in 45 states, and most of what you're seeing here is available in most of those states. So with that, I see we're right at about the 30-minute mark, so I'm going to wrap it up for today. I want to thank everybody for attending, and go ahead and give us a call here. Let me get to my thank you screen so you can see the phone number if you don't have it handy. There we go. Give us a call here, 480-998-1286. We can run illustrations. We can get you any details on these products, help you design your cases, whatever you need. So thanks for being with us today, and thank you again, Michael.